Welcome, and good morning to the Rick Helps Real Estate Show. Hope everybody had a good weekend. Did you happen to see the SpaceX rocket launch go zipping over Western Arizona? That was pretty cool. Walked out of a restaurant. I was watching it on my phone, so I could see when they were going to launch it. And I said, we got to go outside. They're going to launch it in less than 1 minute. And sure enough, it just went flying. It's cool. The sun reflects on the vapor trails. So they're planning on launching that about 30 more times this year. So make sure you keep track of that so that you can see it. It's quite the sight to see. So anyway, hope everybody had a great weekend. So what's going on in real estate? Well, it doesn't change from week to week, but I'm seeing some things that if the trend continues, I think real estate's going to get a little bit softer for sellers out there. Not quite the bargain for buyers. That could take a long time. The big kicker is the CPI numbers that are coming out this Wednesday. The feeling is that they're going to be improved, but we've been surprised before. And what we're seeing right now in total here in our market is that closing counts are very weak in March for resales and not impressive for new homes. Pricing continues to advance for resales, but weakened a little bit for new home, up only 1% from a year ago. New homes took a 22.6% market share. 3 years ago, they were less than 16% of units sold. Well, they were less than 3% simply because 3 years ago, the interest rates were low. The new construction, they weren't offering buy-down rates. Everybody was kind of at par. So there wasn't this rate advantage or incentive advantage for going to new homes. Now, so the median sales price that we're seeing here, much to the surprise of everybody, continues to go up. You can see this year it's going up. There's where we peaked. So it has not declined, even though it's really slow out there. But it's not, when I say really slow, I compare it to 4,400 homes every 7 days. And now we're about 3,000 to 2,900. That number in and of itself doesn't mean anything unless you compare it to the number of new listings that are coming on board, which I do here, and so does the Cromford market. And you can see that our new listings really spiked up last week, and a slight little dip here. I want to see if that continues. Our closings, which is the bottom line down here, going down, and then a slight little uptick, maybe 75 homes at best. And you can see that where we were rolling about 80%, 83% of new listings going under contract, just based on simple supply and demand, that put pricing pressure on the upside. Now, today we're at 73%. And so the gap is widening ever so slightly at a time when we wouldn't expect it to seasonally. Stephanie here says PCE inflation February is 1.80 in February. Usually in February, it's 3.14. CPI is doing well too, 3.2 with full employment. I don't know why the bond market differs. The bond market's a bit of an enigma right now. I don't know what's going on there. I want to talk about M2, Stephanie, so stick with me here. I want to talk about our money supply. I'm seeing some articles and kind of shaking my head a little bit. Maybe you can clear that up for me. Here's canceled listings. What I saw in this morning's data, because this chart hasn't been updated, it says here 413. We had 525 canceled listings. That's an indication that people said, I had something change. I want to take my home off the market. So they either a life event changed or I'm done. I'm out, which is kind of surprising. Mortgage rates are sitting here at 7.01, kind of trending a little bit negative today. Nothing major, no major moves. Everybody's sitting on their hands until Wednesday, providing they survive the eclipse today. Here is, boy, there's some weird stuff to read about that, isn't there? I expected this to kind of go flat and start to go down a little bit seasonally. I'm being kind of on the fence about this now, simply because we're at 17,100 today for a Monday. We haven't been above 17,000 on a Monday for many, many months. And it's only got up about 100. But when I'm seeing that sales number decline slightly, the number of new listings increase slightly, it's adding more inventory to our market. So where this goes from here is anybody's guess in our market. number of price changes per week. This is one that's worthwhile watching. We're sitting at 2,206. Price reductions last week was 2,075. Historically, they're higher. They're always higher this time of year as people attempt to get a decent price on their home or what they thought they could get. So when looking at the market, I don't see a canary in the coal mine that says, oh, here it goes. But I'm seeing some softening, and it's subtle. But if something's subtle for a long time, it eventually becomes reality. And it's, if rates stay where they're at, these increases between the gap of new listings and contracts, it looks like it will grow going into the next month or two. Beyond that, I don't know. Stephanie here says, okay, M2 money supply is added with personal debt credit cards compared with M1 money supply without personal debt at all. Let's look at M2, because here's my question. This is M2. This is the amount of money that's out there. And the simplest explanation, it's how much money is in our economy. How much do you have in your bank, your wallet? How much do the banks have? How many bonds are being held? And you can see here during our 2008 fallout that M2 grew. Well, I thought things were going south. Well, central bank increased the amount of money in circulation, and therefore we had more money show up in our markets. But here's where we're at now, okay? So you can see that we had this problem during the pandemic, and they just opened the floodgates. So look at how much money in the trillions got into our market. That's why house prices went up. There was a lot of money out there. It was easy to get. The interest rates were low. The inventory was tight. All of the buyers that probably were going to buy here moved forward and bought here because they have more money and they had cheaper rates. So it took all of the buying that was going to take place in about 3 years and pushed them forward. The conversation is out there now, and I saw one on Yahoo Finance. Yahoo, why do they call it Yahoo? Talking about that the money supply is dropping, unlike it hasn't dropped before since the 30s, and that's an indication that the market's going to crash, the stock market's going to crash, everything's going to be in tough shape. Now, my simple little mind, I'm going to draw this out here just a little bit, says all things being created equal, if we didn't have the pandemic, the M2 money supply has been growing right about like so, and it would continue to grow here. Is M2 really crashing, or are we just coming back to what would be the means? In other words, where we would be if nothing else was going on. That's where I think we're at. I don't think I'm seeing an indicator here that says everything's going to fall apart. What I'm seeing here is all of this money that's out there. The central bank has been pulling back on mortgage-backed securities, pulling back on treasury, easing off on what's called quantitative easing, moving into quantitative tightening at a gradual state, and it seems to be working so far. There's lots of debates about inflation and how long that will persist. And even Jamie Dimon here has a little bit of difference of opinion with some people. And what he says, he said he sees opportunity with artificial intelligence and said war in Ukraine and hostilities in the Middle East pose risks that could eclipse World War II. So he's saying persistent inflationary pressures driven by fiscal deficits and military conflict, among with other factors, lead to U.S. interest rates of 8% or even more. That's going to be a jolt to the housing market. So he's saying, look, we've got so much debt and we're spending more and more and more because of these conflicts that we're trying to fund that I just don't see inflation coming down or interest rates coming down. Now, he's been right before, but we have to watch and see. But I don't think getting back to money supply that I'm seeing this huge red flag. The article that I read quoted a guy who's on YouTube who basically is raising the red flag and saying, we've never seen this before since the Great Depression. Money supply contracting at this fast. Well, I suppose at a percentage it's declining fast, but as to where it's headed, I don't see it dropping far below that line that I shared. In other words, way down here. Now, if all of a sudden our money supply went this way, I'd say, yeah, I think you got a point. And I should show you that chart when I write on it, right? So when I see money supply going this way, but I don't. And now I'm no economist. I'm just some armchair quarterback here saying, this is getting interesting. Now, when I look locally here, finally, looks like the chip plant, TMC, was awarded nearly $12 billion in CHIPS Act funding for Phoenix, the big Taiwan chip plant up north. They agreed on the money. They're getting their money. One of the delays that they're having up there, which has made them pull back for a year, is they said they just can't find qualified labor to build that to the standards that they need. So the chip plant is going kind of slowly because we don't have enough qualified people that know how to do that. Now, there's been some community colleges and even ASU that have jumped in to try and get people trained and up and running, but it's not going to help you this year. And because they're already building another plant in Taiwan and a couple in Japan, they've got a lot of people out there helping there. So it's just going slower for them to complete this plant. Looking forward here in Arizona, the job growth just continues to climb and climb and climb with everything that we're seeing coming in with data centers, warehouses. A lot of the California companies that store things in warehouses and ship from there are deciding that they're better off over here. I talked to a buddy in San Diego yesterday. I went to grade school with. He says his gas is almost $6 a gallon in California. Well, if you're a transportation company, you're going to be there. You're going to be here. They're coming here. They've raised the minimum wage in fast food places to $20 an hour. He said he went out, got some 6 buffalo wings and a drink. Cost him $32. He's just shaking his head, as are many people. I looked out there to try and find a place where I could park my RV, like Mission Bay in San Diego, for a week. And I quickly said, nope, that's not going to work, because it was $1,550 for a week. Some of the RV sites are $300 a day. And I'm used to paying $50. So here's where you are with the CMI in our market, with Chandler again leading the charge at 211. Anything over 100 is considered a seller's market, and they've gone up 3% versus the week before. Holding up the bottom again is Buckeye, simply because that's where all the building is up there, minus 7%, followed by Maricopa, Goodyear, Queen Creek, Cave Creek, Paradise Valley, and Surprise. There's your buyer's markets right there. Now, you get the term buyer's market and you think, whoopee, prices are way down. Buyer's market in areas like this, like Buckeye and Maricopa, if you're in the resale market, you can count on getting some decent concessions, maybe help towards buying down interest rates, etc. We don't see huge price decreases down there yet. It's kind of difficult to say if that's coming anytime soon. If I look at major price changes here, I'm going to try and take a peek here for you. Let's just pull up Maricopa for a moment and see if we're seeing more price changes down there than normal. Let me get rid of these other cities. Bear with me here. I know you're a patient audience. Here's Maricopa, and their price changes are up to 93. Their price cuts. I mentioned Buckeye. Let's go there. Buckeye is looking at alphabet A, B, C. There we go. Buckeye is spiking higher too, 101. That's pretty significant. 101 price cuts. I don't have this as a percentage. Maybe if I'm able to look at active listings and see what we have. Where did I have active listings? There we are. Let me get rid of this. Go to all, see how many active listings they have in Buckeye. And they have, drum roll please, 660. So out of the 660, 100 of those homes lowered their prices. Jason here says, wild to see the 10-year bond at 4.4, conventional rates at 7. 10-year was at 4.9 a few months back. Rates touched 8%. There's a real disconnect there. Like Stephanie said, the bond market, big disconnect. Is Mesa surprising in its CMI increase, or is the high-tech Silicon Desert Gateway Airport Eastmark increasing its valuation? That's exactly what's happening out there, Stephanie. You drive around out in that Eastmark area, and it is nuts. It's amazing what they're putting up. My son lives down at Power and Ray, and I drove down there the other day, and I'm just shaking my head. All these warehouses, the Gateway, Mesa Gateway Airport, which was just a little sleepy spot down the south part of the valley, is exploding. Now, there was all of that land that was purchased by the state around the Apache Junction area that's eventually going to develop in 10 years. So people are eyeballing that as a way to cash in on some of this growth that's out there. But again, that's going to take time. But from the time you get the permit to the first day that you start digging in the dirt is about 18 months. Until then, you have a little bit of a supply and demand issue. Most of the people that are living out there are not driving to Phoenix. They're working in the Mesa area, and or maybe even at the airport or in some of those warehouses, or just staying at home. So it's a happening place. And as you saw in the CMI, it's Mesa's kind of difficult to track because there are so many different parts of Mesa. You can see that Mesa's here 157. So there's different parts of Mesa. There's Northeast Mesa, which is very high end, up by the McDowell Mountains. There's Central Mesa, I'd say low end. North Mesa, kind of same way. West Mesa, East Mesa is newer. So when you take all of those Mesa zip codes and you put them into one pot, it gives you a number that doesn't really tell you what's going on in that particular neighborhood that you're looking at. So if you have any questions, reach out and ask me. Now, as far as questions, I touched on this a little bit the other day. We are all sitting around in this industry, lending, consumers, and we're wondering what we already saw the NAR settlement that comes out, $418 million, and they're changing some of our rules, which are nothing but transparency. Somebody said the other day, I'm waiting for the law to change. There's no law. There's no real estate law. Now we're sitting back with another fly in the ointment, waiting for the Department of Justice to say that they don't want buyers to pay any commissions or sellers to even offer commissions to buyer agents, even though they paid a buyer agent when they bought their home. But what this does, this locks out VA borrowers. They're not allowed to finance the commission if they're buying. So VA buyers, I guess, are going to have to go directly to the sellers. So we're all waiting and watching this. So we look at it and go, okay, when summer comes up, and that's like the estimated time when they say the agreements and the settlement, which was 104 pages long, by the way. When this comes up, what's the market going to look like? What are we going to do? What are my options? What can I do now? How do I know what I can pay for and what I can't pay for? And if I do decide to buy a home on my own without an agent, what should I look out for? If I do decide to sell a home and I don't want to pay a buyer commission, what options do I have? If I do want to pay a buyer commission, how do I let people know that? What can I negotiate? What can I do? What can't I do? A lot of questions, right? So that's why I have now Rick Helps Consulting. You can book an hour with me. You can book it on this site right here. Click on here, book a consultation, and I'll answer your questions. And not only just answer your questions, but if you're looking at a particular area, let's go over the details and all of the data for that area so that you can make an informed decision. In other words, I want to buy in this neighborhood. Well, what's the supply like compared to last year? What's the velocity? What's the months of supply? What are we seeing? How many price increases are we seeing, or how many price cuts? And what's the market like? What kind of an offer do I think I can write? Now, obviously, if you're already working with an agent, there's not a whole lot I can help you with because of fiduciary duties. So I can't step on another real estate agent that you're working with. But if you're kicking tires and you want to know what's going on in the market, and you particularly want to stay on top of these settlements and the changing of real estate as we get into summer, then hit me up. The link in that website is down below. I'd be happy to talk to you. And I think it's going to be what I call the summer of confusion. So, hey, every Sunday night, I've got a video series now. I come out on Sunday night. It just recaps the week. So it recaps things we saw on Monday, any CMI on Wednesday, Pat and I talking on Friday, anything real estate news related or business related in Arizona. I recap it for you on Sunday nights between 6 and 7 p.m. It's still available for replay. You can see it out there now. So I hope everybody has an outstanding beginning of the week. The eclipse starts in about 2 hours. Go out there and make sure you're wearing the right glasses. Take care.